A little bit of market weakness to start out 2025 with the SPY down 0.19%. We're trading below 585 here in after hours. We're down in our lower dealer cluster zone. This is an area where we oftentimes will see support as option dealers are buying the underlying securities in order to either unwind or hedge their positions. In this case, it would most likely be unwinding as all these put buyers down between the 580 and 585 strikes are unwinding those put contracts as price has traded down into this 585 strike. This is the fifth day in a row now that we have been in negative gamma exposure territory. As you can see here, the last 5 trading sessions all below the zero gamma exposure line. This is often an area where we will see significant bounces, but one of the factors that actually causes more volatility and more downside is hanging out below the zero gamma exposure line for extended periods. So we're starting to get into that zone here where, 5 trading sessions, another few trading sessions below the zero gamma line can often be an indication of volatility consolidation for another breakout higher. So that's something we are watching. If we just zoom out here, you can see we mentioned this in the last several videos. This is a major support zone. So as long as we can hold this level and see a significant bounce back above the zero gamma exposure line, which currently is sitting at 590. Back above that level, positive momentum is going to come back into the market. So we need to see a bounce pretty soon, hopefully either tomorrow or early next week. If not, then the probabilities for volatility expansion are going to start increasing the longer we're hanging out below the zero gamma line and in negative gamma exposure territory.
Thanks, Anthony. In the newsletter last night, I shared this post by Wayne Whaley on Twitter or X.com, and I've got it pulled up. He said the last week of the year was one of the worst last weeks since 1937, where the last week's defined as Christmas to end of year. He was saying there's not a lot of analogs to compare, but he found 4 where we had a double-digit year, but then a 1% or greater last week loss. He said it's worth noting that the 5 trading days after the end of the year saw positive average gains of 2.53%. The future is never guaranteed to be the same as the past, obviously, but to me, we've been watching the market show a lot of weakness, but there may be reasons for bears to sort of temper their expectations over the next few days. And I did want to take a quick look at the VIX. I pointed out yesterday that we were below the whole moving average, and that was a bearish sign for volatility in my view. Well, today we closed above it, and I'm definitely open to the possibility that we see the VIX spike. We almost hit 20 today, and we may reach as high as 22. But I'm still skeptical that this downturn becomes anything more than a pullback this week.
Yeah, it's going to be interesting to see how that last week analog plays out. Be curious to see how the next 5 trading sessions go. Thanks for sharing that. Next, I want to take a look at NVIDIA. NVIDIA, big move today, up 3%, trading above 138 here in after hours. You can see we are still trading above the zero gamma exposure line, but below our upper dealer cluster zone. If you've been watching our recent videos, we've been mentioning this 140 strike as the major gamma exposure concentration, and this is still the case. Still big volume coming in, over 300,000 contracts trading at that level. So there's a lot of interest at the 140 strike. Especially after the move today, it seems very probable that we will hit that level. And if we just look at the overall market pattern, we see basically a wedge forming here over the last month. And, this is often the case where price is consolidating into a breakout or breakdown point. So everything's consolidating right below this 140 strike. It's going to be really interesting to see how it plays out. In terms of the gamma exposure structure, if we just scroll up on our charts, we can see there is slightly more volume and gamma exposure above 135 than below it. Almost nothing going on down here. Everything's going on up here. So in my base case scenario for NVIDIA, I think 135 or higher is the most likely scenario. heading into the January 17th OPEX. So our first target is going to be a move towards the 140 strike. And then if we can get above that and sustain, I'd be looking for our dealer cluster to move higher as the GEX data shifts higher. Again, at this point, it's speculative to say whether or not that GEX shift will happen, but that's what we're going to be watching for as our first indication that a move into the 145 and 150 strikes is likely.
Thanks, Anthony. Let's revisit silver, which SLV, that's the ETF that we covered just a few days ago. And I even left this yellow line up that I had drawn to show an area that seemed to be an important area for SLV. We have yet to drop below it, and today saw a pretty nice gap up. We're above the hole, we're above the lower Keltner channel, and even the chart, appears to show 2764 up to almost 29 on the Keltner channels would be potential upside targets, which you can see right here. Even if we came back down and retested this mid 26 area, it's still looking pretty good to me to move higher. Gamma still positive, still showing mostly interest in just these higher strikes. We have a variety of expirations with positive strikes ranging from 27 up to 30 for January 17. So this January OPEX is looking to be a potentially important date for not just SLV, but a lot of the long tickers that we're looking at also seem to have more positive concentrated there than negative.
Thanks, Sean. Let's take a look at Netflix now. Netflix trading below 900. Volatility has certainly increased over the last several weeks. We've got negative GEX concentrated between 905 and 875 here on the downside, and we are trading, or today we were trading in the lower end of that range and saw a little bit of a bounce into the market close. Last time we were down at this level on December 18th, we saw a significant bounce over the next several trading sessions back up into the 930, 940, which was recent highs back in here. We've got some previous support here if we just go back over the last several weeks. So this could be a potential support as well. That combined with being so deep into negative GEX territory, again, this is oftentimes where we see bounces originate from. If we look at the volume data today, volume pretty spread out between 880 and the 920 strike. And just taking a look at our historical GEX, Netflix obviously has had declining gamma exposure values, and of course, similar to the market overall, the last 5 trading sessions specifically have all been in negative gamma exposure territory. So definitely something to be aware of with the negative GEX, but my bet would be that this area serves as support and we see a bounce at least back up into the 0 gamma level, which is currently sitting around 920. And as a reminder, we are still running our holiday special, $300 off our yearly portfolio manager tier subscription. Use code holidays at checkout. You definitely want to take advantage of that. We have a few spots remaining, so sign up while you can. You'll also get access to our community Discord. There's a ton of great traders in there sharing their own trading strategies and information every single trading session. So definitely check that out when you get a chance. Link in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.